Hey, welcome back to The Dive. China's zero COVID policy, a global food crisis, the upcoming FOMC meeting, rate hikes, zinc, gold, and a must-have stock are topics that our guest will deep dive into today. He is the former Wall Street whiz kid and currently part of a planning group that provides retirement, business, and estate planning services. And of course, he's one of our regulars here at The Dive. Peter Grandich is joining us today. But before we bring Peter on, do me one quick favor and just go ahead and smash that subscribe button so we can keep making you these videos. Hey, Peter, welcome back to The Dive.
Hi, good to be with you.
Okay, so China has mandated a strict zero COVID policy since the onset of the global pandemic, which has led to tight lockdowns in major cities like Shenzhen and Shanghai. What do you think is driving policy in China, and how do you think it impacts global markets?
Well, it's a very strange. First of all, it's horrifying to watch people being nailed into their apartments and being blocked and not able to get out. I mean, that's something that I just think in itself is a story. But in this day and age, unfortunately, there's even far worse stories in the world today. But so it's clear. I mean, they're pretty smart people. They may not be the best of people, but they've shown that they're pretty smart. And so lockdowns have shown that it doesn't work. You can't beat this pandemic by just simply shutting everything down and have everybody hide. So there's a motive past that. And my best guess, because that's all we can do when it comes to the Chinese, is make a best guess, and that is that they somehow think this will impact the Western world far worse than them, and they don't have an issue of sacrificing life and limb in order to achieve other goals of theirs. Now, the actual lockdown itself is going to cause widespread problems if it hasn't already, because all you have to do is look at some of the things that are online showing you how many boats are off the coast, China, and all those goods that were supposed to be coming to the US and elsewhere aren't, and they have problems of loading. And then we're going to have the same issues we had last time here. We're going to get a bunch of boats in. They're not going to be able to take them in at all. The trucking is going to be a problem, et cetera, et cetera. So net, answer to your question is it's a huge problem. It's not going to go away anytime soon. And they have motives that we may all not be absolutely caught up on what they're hoping to do. And they also have, and I think you have to be fair to say this, they have some serious issues with their own financial markets. So this is not something that should be taken lightly, and it's something I think all of us need to watch closely.
Now, Ukraine and Russia are major exporters of wheat, barley, sunflower oil, and corn. Together, Ukraine and Russia account for about a third of global wheat exports and 20% of corn exports. Do you think we're moving towards a global food crisis?
I don't think we moved. I think we're here. I think we're seeing it. We may not get reported as much from the regular news because it's not a politically palatable thing that people want to hear in countries. But I'll give you one insight. My wife and I have been involved with some food banks, and one of the things that we're hearing across the board here in the U.S., and I got to believe it's happening in the U.S., it's happening everywhere, because the most ample place to get food is still the United States. So if we're having this issue, certainly everybody else is, and that is the food banks have not only noticed a dramatic increase of the number of people that are coming to a food bank, but the working class people that are. And so with the gas prices going up and food prices going up and all, and then the ability we have here in the northern plains, we had a very bad late winter storm that prevented some planting, which is going to impact food. So yeah, I think the issue, unfortunately, here, and it's just one of the many critical issues why I've erred and taken this live chicken versus a dead duck attitude to the market. So yeah, the crisis is here.
Okay, now as we approach the May FOMC meeting, there's lots of talk about 50 basis points being on the table, with a possible 75 basis point hike in June. We have to ask, do you think that these rate hikes can tame inflation?
Well, the inflation genie is out of the bottle. And one of the difficulties, and again, one of the things that have led me to be so bearish on equities and bonds, is the fact that here in the U.S., I can only speak to the U.S. market, Over half of financial advisors have only been licensed since the last financial crisis, and less than a third since before 2000. So, A, they've never experienced a down market for a long time, and they certainly haven't experienced an inflation rising market environment. And I think that's going to be one of the negatives. Also, people say, well, this is not going to be like when Paul Volcker did in 1980 and raised interest rates to 20%. It's not going to happen. Well, keep in mind, we were the world's largest creditor nation at that point in time. Now we're one of the world's largest debtor nations. So interest rates don't have to rise anywhere near as much as they once did before to have an impact. And the best way to look at it is this way. We have over $30 trillion in hard debt now in the US, not counting Medicare, Medicaid, and Social Security, what we owe for that. If interest rates just go back to 5% and stay there, which not too long ago, that was a very low interest rate, we're going to look at 1.5 trillion in interest expense on that debt. And the best year we ever had in income as the US was our tax base in 2019. We took in a little bit over $3 trillion. So almost half of our interest is going to pay interest expense. So there's a huge problem. And the big $64,000 question, or 64 million these days, because that's with inflation. The bottom line is, where does the Fed cave? At what level does it become too politically pressured to keep rates higher because markets and all are being hurt? And then, of course, does that really reaccelerate inflation again, even if they tamed it? And no one knows that until we get there.
Now, zinc inventory slipped 25% on the London Metal Exchange last week, nearing the lowest level on record. Do you think that this highlights a risk for a squeeze?
The good news is, if you're bullish, yeah, there can be a squeeze. The bad news is what the LMA did with nickel clearly shows that even if you don't want to believe markets are manipulated, and I think you have to be in a cave not to believe that, but even if you don't, it goes to show you what the powers that be will do to protect shorts at extremes than they will longs. If it was the opposite and the price collapsed and a lot of individuals were getting killed because they were long, I don't think they would have done the same thing. So I think that's more important to recognize. And I wouldn't buy zinc just because I hope there's a squeeze. I will tell you, it's probably one of the forgotten base metals. It hasn't received a lot of the attention that others have during these crises. But it also suggests that because of that, it's probably one that still has upside in terms of stocks related to that. I don't follow enough of them. The only one that I own is a junior company called Constantine Metals that has a zinc project in Alaska. But I think zinc has not been looked at in the same way that copper and platinum and palladium has.
Now let's talk gold. We've reached a price level of around $2,000 for the last couple of weeks, but now it's come down to $1,900 again. What are you seeing in the price action of gold?
Now, I'm not making fun of you because you're a very lovely and pretty lady, but oh my God, it fell from 2000 to 1900. That's the attitude people have. It's like, I find it hard to believe, because you know why? I remember being at conferences praying to God it would get above 350. So 1900 is still a very, very good price. If gold stayed at 1900 for the next 3 to 5 years, I don't think most producers would mind that, since their cost is 1200 or 1100 or 1000. But given what you just said, and I didn't mean to make fun of you at all, but just I put out a thing this morning before we speak, and I showed a gold chart going back to when the pandemic started. And it's the most bullish chart for the last 2 years. We just keep making a series of higher lows as we hit up at 2000 and come back. And it's just a matter of time before we break through that resistance. So can it go back to 1800 from here? Yeah, it can. But when there's $100 down risk, in my view, and a 500 to 1000 upside risk, I still have to be highly favorable towards gold.
Okay. Now, we saw in one of your PG Speaks that if you could own one stock, that it would be Arizona Metals. Could you give us some color on this?
Well, I don't normally speak about individuals, but it is my single largest holding. It is the stock that I'm at the twilight of, towards the end of my career, 38 years. The old saying, bet the ranch on. It's the most interesting, let's put it this way, it's the most interesting stock that I've owned. And I want to caution your viewers, I've made and lost millions, not once, but twice. So just because this person that they're watching and it seems like he knows what he's talking about, don't run out and mortgage the house because I mentioned it. However, if you have mental and financial risk tolerance where you can afford to lose part of all your investment, it's the single best company I've ever seen. It has we're in Arizona, which more and more importantly, I will say for people that are interested in mining shares and exploration, it's really going to matter where you are. What we've learned now, we've seen what happens when unrest hits, that suddenly supplies of metals could be in doubt. So it's going to be very, very important where your exploration or mining company is located. These guys are obviously located in Arizona based on the name. They have I think, and I believe he's been a guest on you before, they have the single largest, best person I ever met in terms of brains and putting their own money where their mouth is, Michael Gentili, as their largest shareholder. And Michael just was kind enough to speak to me in the last 2 days, and we recorded it. And he noted that he already thinks just one deposit they have is already possibly up between 20 and 30 million tons when the market only knows of its historical being 6 million tons. And yet they're first going to be drilling their second and first best target. This was their third best target that they found all this metals on. And here's the other thing, which is really unusual. And since you asked me, I'm just going to go full board here. I've been saying to friends, you remember the movie, it's an old movie, The Greatest Story Never Told. It's always shown around Easter and all. Well, greatest story ever told. This is the greatest story almost never told, because this is a company that only first now, despite a $500 million market cap, is hiring his first investor relations person. They've been 1% promotion in my book, 99% business. And thank God, because they have the goods. This is a stock that I told people that there's only two things that can go wrong. The markets cave because the world economy caves and copper goes down back to 250, and maybe we just get our money back when this one deposit finally is brought into production. Or there's an earthquake in Arizona and this project slides into Nevada. That's about the only negatives that I can come up with. Yet I believe that there's an opportunity that this thing could trade, 3, 5, even 10 times higher than it is. And you only have to look what little the public has said, the company has said about itself, and do your homework, and you can have that. So that's why it's become, the single largest holding I've ever had, and why I've spoken so much about it, even though it always, as any stock has some sort of risk. There's no sure things.
Okay, great. Well, Peter, thank you so much for joining us today. Before you go, for our viewers, could you let them know where they can get more of your commentary?
Well, I'm down to just, I don't do Twitter. I don't do Facebook. I do have a blog, petergrandich.com. And from time to time, I make some videos, and like your interview, I'll put this up on our YouTube channel as well.
Perfect. Well, thank you, Peter. We'll see you next time.
Thank you.
Thanks so much for watching today. Our next video is with Rick Rule, so you're not going to want to miss it. So be sure to stay tuned by hitting that notification bell and subscribing below.